Hi, and welcome back to Small Caps. I'm Jess Furtick, and today I have the pleasure of speaking with Alex Scanlon from Barton Gold. He's the managing director, and the company's ticker code is BGD. Hi, Alex. It's great to see you.
Hi, Jess. How are you?
Thanks for joining us. Okay, so just going straight into some of the recent results that Barton's just put out. So you've identified a 700-meter gold zone at Area 51. How
Mhm.
confident are you in converting this into a JORC resource, and what's the potential timeline on that?
Look, we always have to be a little bit careful when we talk about confidence in these things because JORC estimation is in and of itself an expression of confidence. So that's like saying we've arrived at the confidence. But that Area 51 target that we've infilled, I think the safe way to say it is we identified that and then extended it and then infilled it in exactly the sort of progressive, systematic approach that we used at the other what are now deposits in that area. So we found 3 other new gold zones there over the past 3 years that we've converted all of those into JORC resources in December. At the same time, we infill drilled Area 51, so it's coming along just a little bit behind those other zones. And I think based on what we see, that we could have a reasonable expectation of mineral continuity and a reasonable prospect for eventual economic extraction and therefore a JORC resource. So all of that said, that is very much in process at the moment. We have all of the data with our external resource consultants. We use external modelers for, I guess, conservatism and independence. And we're hoping that we can have an upgrade again for the Tunkillia project at the beginning of March, which would be our third JORC resource upgrade of the project in 12 months.
Okay, perfect. So, Alex, now just building on that, you had recent drilling at Area 191, which revealed visible gold. So, what's the significance of that in terms of the project's overall development?
Yeah, look, that's a very interesting thing for us. And we don't know enough to kind of call any big shots yet. But what is interesting about that is the main deposit area and the new 51 zone, they sit alongside the sort of one side of a shear zone, a really large shear zone. It's several kilometers wide. On that western side, we have this now string of deposits and potentially another one to be had in Area 51. Area 191 is actually on the other side of the shear. And so there's different contact geology. So our thinking there was that there might be something potentially different going on. And we had this sort of collection of historical high-grade intercepts there that were kind of like lonely little intercepts in space. We didn't have any geological context. So we drilled some diamond holes, which have given us these latest results. And what they've done is they've put a lot of that into context. So we've now confirmed the model there as prospectively kind of a generally east-west trending, north-dipping fault that looks like a control for mineralization. And right where we drilled through that, just above the fault in the hanging wall, we drilled 3.8 meters at 68 grams per ton. And then that sort of validates some of these historical results, which are 2 meters at 35 and 5 meters at 7 grams and 10 meters at 4 grams. And it starts to give you the first guess of a picture. But the significance is for the Tunkillia project is we have been building this up as a large bulk open pitable style development with the idea that our neighboring Tunkillia project just to the north could serve as supplementary high grade feed because that's the high grade Tunkillia goldfield. But the significance of Area 191 may be that if that grows and turns into a high grade resource, then we actually have a high grade resource inbuilt into the Tunkillia project itself. So right on its doorstep, we could have high grade feed to blend up the average feed grade through a high efficiency, large capacity mill.
Yeah, that's amazing, Alex. Now, taking a step backward, you mentioned 3 new zones being converted to JORC resources in December. What is the total estimated gold resource at Tunkillia right now?
Right now, it's 1.38 million ounces of gold.
Okay, fantastic. So now
Yeah.
So with promising results now at Area 51 and Area 191, which zone is going to receive most of the exploration focus in the near future?
So we very much have focused on building that base and demonstrating that sort of scale that Tunkillia can prospectively stand alone. So once we complete the JORC analysis for Area 51, that gives us that kind of baseline profile of it as a large bulk open pitable, so 1 gram style deposit. So we will be looking at taking the project forward into scoping studies or preliminary economic analysis, depending upon which market a listener might be familiar with. But generally scoping studies, so that level before a pre-feasibility study to get a general baseline. Where we're going to be really focusing now as we go through 2024 in parallel with those initial financial studies is focusing on delineating high-grade material, both at 191 now, which sits within that sort of Tunkillia project, and the neighboring Tunkillia project. In parallel with all the drilling we did at the end of last year and the upgrade of Tunkillia, we published a new, basically a 3D architectural map of the Tunkillia goldfield. And the significance of that is that is the first time in its 130-year high-grade history that we can actually see across this sort of 15-kilometer-long area all of these structures underground, where they intersect, and how that maps and comports with known historical high-grade occurrences. So all of those now sit within a consistent structural framework. This is the first time in 130 years anyone's been able to see that, and it gives us several new targets to follow up on. So we will be looking to focus on establishing the economic baseline, and that's kind of the cake. And then looking this year at sort of adding the frosting, finding this high-grade material that can at once improve Tunkillia's overall development profile, but which can also be mined first and taken through our existing mill at our Central Gawler mill and start kind of a stage 1 high cash flow operation where we don't need to build a mill because we have a fully constructed, fully permitted mill where all we need to do is essentially recommission and reinstall our gravity circuit.
Yeah, so Alex, so you've mentioned, doing all of these scoping studies and moving towards PFS. So given these recent very high-grade gold discoveries that you've just made, how has your timeline for the development of Tunkillia changed? And if so, how?
Well, what I would say is the timeline hasn't changed. It's progressing very much as intended and as we've hoped and as we've intended. I think the idea is very much like we have done during the past 3 years, where I think a lot of the market was kind of in standstill through a very sort of difficult period for gold equities, particularly junior gold equities. We've really just consistently kept doing work. We're very well funded. We have been very well funded. And we generate income from our asset base, which is, again, kind of an unusual proposition. That's allowed us to keep doing a lot of work and making progress without doing a lot of public raisings and deeply dilutive capital issuances. So we'll continue that sort of steady march forward. I would say that the way to think about it is that the timeline continues. We maintain sort of our pace and progress towards that outcome. But as we continue to add in new high-grade materials, that is an opportunity for us to then enhance and improve the various stages of studies that we're going through. And what that really will mean is, say, for example, we take the existing deposit, and just for sake of imagination, we say we have a scoping study to produce 100,000 ounces for 8 years. Well, as we find more bulk open pit material or more high-grade material at Tunkillia or the neighboring Tunkillia project, we can say, okay, well, now we're going to add some high grade in, and our feed grade is going to go up, and we're going to produce 125,000 ounces for 8 years. Or now we're going to add year 9 and year 10 and year 11 and year 12. So the idea is to keep moving towards real progress, real outcomes, and then just keep enhancing that along the way. So yeah, returns enhancement, risk mitigation, steady progress. I think that's why we've gotten a lot of support from the markets, certainly relative even to the gold price and many of our much larger producing peers. And I think that's why we continue to attract the interest of really specialist institutional investors who look at gold, look at development stories, look at development teams, and take long-term positions.
Yeah, so Alex, so based on your example now, talking about production, and we know that you're moving towards scoping studies and PFS and things like that, but what do you estimate the potential production capacity of Tunkillia to be, in the future?
Well, I think we've sort of articulated an objective as a company to produce 150,000 ounces per annum. That would make us, a fairly significant kind of junior mid-tier style producer in the context of the Australian market. I think we see the potential to support that in our existing assets as we know them. So, if we do grow Tunkillia to 1.5 million ounces, if we're able to convert 2/3 of that into reserves, and then say make that an 8-year project, that's 125,000 ounces per annum on average, roughly. Then if we're able to add some high-grade material at Tarcoola or even indeed in Tunkillia, that might add another 25,000 ounces. So we sort of think about these things as the component parts, but we would like to see the current assets on the track we can see opening up for them from an exploration standpoint, support that 150,000 ounces. And then the question becomes, well, if we now then underwrite that, with all of the exploration potential we see along the much broader portion of the Tunkillia shear zone that's yet to be tested, and the broader Tarcoola goldfield, in 5 years' time, if we've hit our 150,000 ounce target, are we then looking forward another 3 or 4 or 5 years and saying, now we want to get to 250 or 300? So we're kind of always looking down the road, but right now we're aiming for that 150,000 ounces.
Yeah, fantastic, Alex. And it certainly helps getting some of those really high grade results coming in as well from your exploration efforts, no doubt. So now we're seeing from a macro perspective an uptick in gold. What, in your opinion, are the biggest sort of challenges and opportunities now for realizing the full potential of the Tunkillia project?
Oh, look, I mean, I think the biggest challenges are those that exist for any development proposition. So, we think about the company moving into an operational position, so an operational standing from an explorer developer position. We have the ability to sort of cross that magic drawbridge, if you will, leveraging our existing mill, and then prospectively some existing high-grade mineralization at Tarcoola. So that for us is really important. We can take that step, become a producer with much lower costs, much lower risk, much shorter time. And we have fully permitted mining leases. We have a fully licensed mill. That's an opportunity. Tunkillia is therefore anticipated to be kind of an expansion story, right? So once we have that base of smaller scale production, but hopefully high profit production because we don't have to pay to build our first mill, we then use that capital and expand into Tunkillia. And so for Tunkillia, we have to do all of the typical things you have to do. We still have to go through full feasibility studies. We have to go do the environmental analyses. We have to get the permits and the mining lease and then do the financing and construction. But we do have the benefit with that project of some historical insights. There were historical feasibility studies done. There were actually early applications to apply for a mining lease, and our inquiries suggest that there were no objections to that. So we have a little bit of insight that's very valuable to us in thinking about how we might do that, and perhaps an easier pathway than other areas. And then, of course, the capital risk elements. If we're going to go build a new mill there and have a second mill in this region, that comes at a cost. We have, I think, reasonable indications that we could get strong credit support for the development of a second mill, not least because we already have an existing mill that presents real asset security for lenders. And ostensibly, if we're operating a stage 1 operation, we'd be generating cash to cover a good piece of the equity component. So the finance side, if we do stage 1 well, the finance side for stage 2 kind of falls into place. At the end of the day, I think the the thing that sort of keeps me awake at night is just continuing and being able to kind of keep this, consistent pace going forward. At the end of the day, risk mitigation and progress equals value. That's what we have sort of been good at. We have a really, really good team with, and our leadership team is well over 200 years of experience exploring for, permitting, financing, building and operating significant resource assets with particularly pedigree in gold and South Australia. So it's just a desire to get this done and get it done well, and make sure that we don't make the mistake of stepping on some of the sort of the traditional pitfalls that you will often see beset a sort of an aspiring producer.
Yeah, so explorer developers certainly need a lot of tenacity and patient capital, and good teams behind them to deliver on that. So, Alex, I guess this is a good segue into, my final question for you, which is just giving our small caps audience just 2 or 3 key investment highlights as to why investors should have Barton Gold on their investor stock watch list.
Okay. Look, I mean, I think it's probably I sort of jokingly refer to this as sort of the 3 Ps. That is the platform. We have a fairly unique platform. We have between our Tunkillia and Tunkillia projects, we have 3,000 square kilometers of ground. We already have about 1.4 million ounces on those projects together. We own a gold mill. We have the ability to leverage existing infrastructure and permitting, which gives us a 2-year and $200 million head start on a development proposition. Progress or performance, that's really, really important. During the past 3 years, notwithstanding market conditions, we have just consistently identified new gold zones, converted those into new resources. We've created value from our existing assets, whether we're renting our camps or disposing of surplus equipment or producing concentrates from our mill. All of these things wrap up in both corporate and project performance that I do think sets us apart from much of the market. And then the third one, people, very important. Teams deliver outcomes. We have an excellent team. We have a really dedicated a team of gold experts and corporate governance experts and infrastructure experts that are really pushing to create something significant for South Australia. And we have seen that come out in our performance to date. So, that people component really is the most important thing. That's what's driving our success, our creativity, our outcomes, and that will be how we deliver these objectives for our shareholders.
Thanks, Alex. So it's platform, performance, and people. So the 3 Ps from Barton Gold. Oh, fantastic. Thank you so much, Alex. Really appreciate your time with us on Small Caps today. And yeah, really looking forward to continuing to watch the company's progress and having you back on the show soon.
Well, thank you very much.